Part C reads, explain 5 objections, explain 5 objectives, explain 5 objectives of insurance regulatory in your country. Objectives of insurance regulatory in your country. Now, the first objective of insurance regulatory in Kenya is consumer protection, protecting consumers. 1. Consumer protection. Consumer protection. Insurance regulation aims to protect consumers by ensuring that insurance companies operate fairly, transparently, and in accordance with consumer rights. And that includes monitoring insurance practices, that includes monitoring insurance policies, and pricing, insurance pricing, to prevent fraud, misleading advertising, as well as unfair treatment of the policyholders. So the first objective of insurance regulation, the question says insurance regulatory, but I think this should be insurance regulation. The question says regulatory, but let's change it to objectives of insurance regulation. Now, the second objective of insurance regulation is financial stability. That's yet another objective of insurance regulation. Insurance regulation seeks to maintain the stability of the insurance industry and protect policyholders' interests by monitoring the financial soundness and solvency of insurance companies. And that involves setting capital requirements, conducting financial audits, and also implementing risk management frameworks. Market competition. Market competition. Insurance regulation promotes what we call competitive insurance markets. By doing what? By preventing anti-competitive practices, ensuring a level playing ground or field for insurers. It involves monitoring market concentration. It involves prohibiting unfair trade practices. It may also involve promoting market entry and innovation. That is how insurance regulation manages market competition. 4. The fourth objective is in relation to the policyholders. Policyholder confidence. Policyholder confidence. Insurance regulation aims to instill confidence. It aims to instill confidence in the industry. That is the insurance industry. It aims to instill confidence in the insurance industry by establishing standards, by establishing codes of conduct that insurers must adhere to. And that includes enforcing ethical conduct. That includes handling of claims as well as prompt resolution of disputes to maintain policyholders' confidence and trust. Policyholder confidence. Number 5, we are discussing the objectives of insurance regulation in Kenya. Compliance. The last objective has to do with compliance with legal, and regulatory requirements. Compliance with legal and regulatory requirements. Insurance regulation ensures that insurance companies comply with relevant laws, comply with regulations and licensing requirements. And that includes licensing and supervision of insurers. It may also include approval of insurance products and enforcement of compliance with anti-money laundering and fraud prevention measures. So these are 5 objectives of insurance regulation in Kenya. 1, consumer protection. 2, financial stability. 3, market competition. 4, policyholder confidence. And lastly, compliance with legal and regulatory requirements. 5 marks. That is part C.